Hi guys, welcome back to Options Advantage. All right, guys, welcome back. So today we're going to go through some market movers, what happened with the overall market today, and then we're going to go through expiration dates on options contract and how to select a specific expiration date, whether you're day trading, scalping, or swing trading. So let's go ahead and get started with the market movers for today. Money work. All right, guys. So if you didn't know, there is an FOMC meeting going on right now, I believe. So the market tends to be a little choppy or sell off prior to the FOMC meeting. So you can see here, this is the Nasdaq futures sold off today here. Overall market went with it. It is picking up slightly now that the FOMC meeting is starting. So overall market was down. Market sentiment was down. So I'm going to go through some of the stocks that I saw kind of move or that could potentially move in the future, since there was not a lot of upwards movement today. So first stock we have is going to be Disney. So Disney I like for long term. So Disney on a higher time frame, if you take a look here, so I have a level on Disney at 184. It was able to hold that 184 level here. Disney also has multiple price target increases ranging from about 215 to 250 or 230, I believe. Today it had 2 as well. So Disney, I really like if it's able to hold this 185 area, which it was able to hold above 190. We can see Disney back to those all-time highs here, close to 200. And if we look at Disney's options chain here, so this is this week's expiration. You can see there's some open interest and some volume, but take a look at the end of March. So this is the March 19th expirations for Disney. And if you take a look here, there's a lot of open interest and a lot of volume on those 200, 210, and 220 strikes here with Disney. So Disney, I'm looking for a bounce play, long-term play into the end of March, potentially, if it's able to hold above that 190 level. It was able to hold 184, which is really good. We can see a significant bounce on Disney longer term, but this is going to be a long-term play. Nothing this week or next week. I'm looking towards the end of March. Early April, but it looks like the end of March has a significant amount of open interest, which is good. And then we have Apple. Apple is something that I really like. So I'm going to show you something. So Apple broke my downtrend here. Apple was on a steady uptrend. It had created an all-time high here at 145 once it came out with news that they were going to come out with an Apple car, an electric vehicle. Ever since then, there wasn't a lot of, I guess, hype around that. There was in the beginning, and then it just kind of fell due to obviously Kia stating that they didn't want to partner with them, or they weren't going to partner with them, and then Hyundai also stating the same thing. So Apple's kind of pulled back from those all-time highs. However, there is anticipation with Apple's car coming out and them partnering with someone. They are going to partner with someone. And with that, I want to show you something. So there was a lot of call flow on Apple today. So I'm going to show you guys here. If you look at Benzinga Pro here, I'll show you the options activity on Apple. So if you look here, let me see if I can pull this up on Apple here. So there was some call sweeps on Apple for this week, but then there was some call sweeps later in the week and then into March as well. If you take a look, a lot of call sweeps on Apple, a lot of options alert closer to the end of March, you can see here. And then if we look at the flow on Apple, so Apple had the most bullish and bearish flow for the day today. But if you look at the bullish side, if we open this here, and let me just increase the screen so you can see, most of the call sweeps on Apple are all March 19th expiration, or further out than March 19th, but a lot of call volume towards the end of February and into the end of March. On the opposite side, if we see the bearish put sweeps here, you can see that there are some bigger sweeps towards the towards May and the end of the year or next year. Usually when I see things like this, it's most likely, obviously you don't know for sure, but I'm assuming that it's most likely a hedge when you see big orders like this. This is a block order too, so it was one big order, so it could be a potential hedge of a position. However, on this side, this looks more, it doesn't look as much of an anomaly. It's very, very steady. A lot of call volume on those 140s, 142 strikes on Apple. And then this is something that I've actually never really seen on the options chain with any stock. And I've been trading for about a year and a half with options. If you look at Apple's options chain here, let me see if it'll update. So look at the March 19th open interest. So remember we saw that options volume flow on March 19th. Now look at the open interest. I've never seen open interest this high on any stock with further out expirations. You can see the 135 and then the 140 strikes have an insane amount of open interest and volume on it. I'm assuming if I'm looking at this as a trader that there are some institutional trades or institutions that are looking at Apple longer term in the next couple of weeks. Obviously, it's not longer term, but in the next few weeks, anticipating maybe some news or something to come out on Apple potentially. I do think that this is a significant thing to pay attention to. So Apple's chart, I'm looking for Apple to hold 130 for this. Close above 130 today. If Apple's able to close above 130 today, we could see a potential bounce depending on how it opens tomorrow or towards the end of the week. I am going to wait on this play. I just want to see how it closes because if the market falls, it could potentially fall to 128 towards the end of the week. And then if it's again able to close above that 130, Apple swings into the end of March. Good potential play on that one. And then have one more for you guys today. So Amazon. Amazon's probably the only stock that moved to the upside today from what I know. Amazon had news that they bought the Australian company Sells, which is an e-commerce similar to Shopify. It's actually a competitor to Shopify. And they also had a price target increase on them by Citi to $37.50. So you can see Amazon did run today. So I like Amazon if it's able to hold above 32.20. There is a strong level of resistance at that 32.20. It's also a psychological level with Amazon. So if Amazon's able to break above 32.20, we can see some more upside for a potential scalp for today or a potential, it's towards the end of the day. So scalp towards the end of the day during power hour. If we do see Amazon break above 33.20, we can see some more upside to it. Probably my next level on Amazon is going to be 33, sorry, this is 33.20, I apologize. And then 33.30 could move to 33.30 and then the high of 33.38. So Amazon on watch for today above that 33.20 based off of the news. And then for a swing on Amazon, not really looking for a swing on Amazon. It has been kind of in this weird kind of consolidation period right now. Not much going on. I wouldn't swing Amazon on it unless it's really able to hold above 33.50. That's a strong level of resistance on Amazon. So personally wouldn't swing it unless it's able to hold above 33.50. But there is a positive catalyst behind it. So we could see some more upside momentum and was able to hold this 32.50 level of support down here. So we could see a bounce back up to those highs as well. So those were the market movers for today. We're going to go ahead and go through some options learning with you guys today. So all right, guys, so today we're going to go through expiration dates. So I went through kind of the options chain and showed you guys further out expiration dates. So I'm going to go through how to select the expiration date depending on the strategy that you're utilizing. So for example, if you are scalping, how I like to play scalps is towards the beginning of the week. So Monday, Tuesday, Wednesday, you can buy the same week expiration. Because you're scalping, you're not holding that position for a long period of time. So you're less at risk to adverse events, say economic news on the specific stock. You're less at risk to that versus a swing or a day trade because you're not holding for a long period of time. You're holding for a couple of seconds to a couple of minutes. So you can buy same week expiration. Now, when it comes to same week expiration, when you're scalping, playing same week expiration on a Thursday or Friday, especially a Friday, because it's 0 days to expiration, 0 DT. Remember, we went through that. It is a lot riskier due to time decay and IV. So if you look and delta as well. So if we look at, I'm just going to show you guys the options chain here, and let's just look at Apple's options chain. So if we look at Apple's options chain here, so this is this week's expiration. So the 19th of February, you can see that we look at the delta. Now this is going to drop even more tomorrow and then Friday, because we're only on Wednesday right now. If you try to scalp day trade, or even scalp a Friday expiration, same day expiration. So say on Friday, you want to scalp the 19th expiration. It's a lot riskier because one, the theta is at its peak. It's the last day, really high time decay. Theta is going to be at its peak. You're going to have a higher theta versus obviously your further out expiration. So if you see here, the theta on this week's expiration for Apple, a lot higher than the theta on next week's expiration on Apple. Another thing that you're going to notice is that the delta on out of the money contracts is going to be a lot lower. The delta follows a dollar move in the underlying stock. So obviously you want a higher delta so the premium can move. So say, for example, here on Apple, 0.45 delta means that every dollar that Apple moves up, your premium is going to move 45 cents. So obviously, if your delta is lower, your premium is not going to fluctuate as much. And you can clearly see here, this is, again, just Wednesday. You'll see more of this towards Thursday and Friday. You can see that the out of the money strikes on Apple here have a lower delta, signifying that every time that the stock moves, your premium is not going to move as much with it. So a dollar move in Apple on the 137 strike, your premium is only going to move 5 cents. Obviously, that's not enough movement. You want a higher delta for your premium to pay out more at the end of the day. With a lower delta and a higher theta, obviously, because of time decay, every time that the stock pulls back on a Friday, and because your delta is so low, the stock is going to have to make an even more significant move to the upside for you to make up that premium loss again. Or even if you're in a profit, every time that the stock pulls back because of theta and the low delta, the stock's going to have to make an even more significant move, and you could potentially lose the profit that you're making if you want to day trade the same week expiration or even scalp. So when you're scalping on a Friday and you decide to pick the same day expiration, yes, there is a lot of reward to it because of the high theta and IV. Your premium is going to move faster. That's why on Fridays, if you have ever played 0 DTE, you've noticed that your premium fluctuates a lot more because at the money strikes are going to have higher deltas. If the stock pulls back, you're more prone to taking a bigger loss, or if the stock doesn't go in your direction and it fakes out or whatever the case may be, you're prone to taking a bigger loss because of that fluctuation in premium. So there's the positive side to it. Premium fluctuates greatly on the upside and you're in calls, that's great. You need to get out, take your profits as soon as you can. However, if you make the mistake of, getting into a false breakout, you're more prone to taking a bigger loss, a higher percentage loss on a same day expiration versus if you were to just buy the next week expiration, because theta is not as high and IV is not as high for the next week's expiration. So if you're scalping Monday, Wednesday, Friday, feel free to buy same week expiration. On Thursday and Friday, especially Friday, you want to make sure that you're buying next week's expiration just to give yourself some time, give the options contract some time, and there's going to be less fluctuation in your premium, which is good and bad. Obviously, you're not getting the higher percentage returns. However, you're taking a safer play. So if your risk exposure is not as high as some other traders or other people, you may want to stick to the safer play of taking next week's expiration. Now, when you're day trading and swing trading, so when you're day trading, the same concept applies. You don't really want to day trade a same day expiration on a Friday. Like I said, every time that the stock pulls back, and I've noticed this, for example, I'll be up, 50% on a trade on a Friday expiration, and I want to decide to hold it. The problem with that is that every time that stock pulls back, you're losing a greater percentage, and the stock, because the delta is lower, the stock has to make an even more significant move to the upside for you to gain back that 50% that you were up. So if you're up 50% and you don't lock it, the stock pulls back on a Friday, you decide to day trade it, because of the high IV and the low delta, stock pulls back, you lose about 30%. If the stock moves back up even $1, $2, you most likely won't make that additional 30% back. It'll have to move 5 or 6 points for you to be able to make that additional 30% back. So don't day trade same week expiration. It's not going to move in your favor. Buy next week's expiration always when you're day trading, especially if it's Thursday or Friday. Monday, Tuesday, Wednesday is fine. You could day trade same week expirations. However, on a Thursday and Friday, I really don't recommend trading same week expiration. You want to buy at least 1 week or 2 weeks out to be on the safer side. And then when you're swing trading, always buy at least 2 to 3 weeks out when you're swing trading. You want to give the stock time to make the move. So if you're watching a stock on a, say for example, daily time frame, and you're looking for a play on the daily time frame with whatever stock that you're watching, you obviously, the stock, these candles are daily candles, which means that you need to give the stock enough time to make the move. So for example, if I'm looking for Amazon to break 33.50 and I'm waiting on it and it breaks 33.50 and I'm anticipating a move to 3400, obviously I'm not going to buy same week expiration. This is a huge move on Amazon, daily candles, daily time frame. I'm going to buy at least 2 to 3 weeks out swing trade in order for me to give that stock time to be able to make that significant move on the upside. Obviously, if you're looking for an overnight swing, you're just swinging into the next day, I still recommend buying at least 1 week out. Don't swing same week expiration. The theta and IV will crush your premium. You will not, especially if it's towards the end of the week. I've done this before. If the stock doesn't move in your favor, you'll take a hefty loss on it. You could potentially even take the full position loss. So I always recommend swinging next week's expiration. It's just safer. And then if you're obviously looking for a further out play or a play on a higher time frame, you want to buy at least 2 to 3 weeks out expiration. So just like, for example, Apple's play. So I'm looking for Apple to bounce off of that or hold above 130 and go back to that 145 level. Obviously, Apple's not going to go to 145 in the next week or two. It could take a couple weeks, several weeks. So that's why, if I were to swing a play on Apple, I would look for a month or 2 months out expiration, March or mid-April expirations for it to get back up to those all-time highs here. Okay. So that's what we have for expiration dates. Do you guys have any questions, tickers that you want to go through? We'll go through some ticker time and some questions. Just comment them in the chat.
All right, I'll start pulling those into the chat for you here, and I'll let you know that. And so let's go ahead and go through. Before I get to that, I definitely want to give you, some shout outs that I saw in the chat. We got a couple people saying that you're dropping some good knowledge, really smart. I got someone even saying that, Masi, I'm starting to really understand options, and this is awesome. So thanks. So definitely.
Yay.
That's what the show is really all about. Masi only gets 3 days on here, so if you guys want to see a little bit more of Masi, definitely check her out on YouTube. You guys can go ahead and subscribe to her YouTube and see more of the option content. Let's go ahead and get some option tickers to take a look at. Let's see. Now they're rolling in there. I see them starting to come now. Let's take a look here at the famous sundial right now. And I like how you added the laugh picture in that one, Isaiah. So let's take a look at sundial, see if there's any options. How's the premium in those? I know the stock's moving very volatile, so you already know how that affects the premium there. Let's take a look here.
Yeah, so something that I've learned with stocks that move like this, you're better off buying shares of stocks like this. Options premium, unless you buy like months out in advance, the IV and the volatility in the stock are going to shock your premium, and it's going to crush your premium. So when you're trading stocks like this, I definitely recommend trading shares. I wouldn't necessarily hold on to options contracts because just of the IV and the volatility in these stocks. And if we look at this stock right now, it looks like it has a wick fill to the downside right now. So you can see this wick. We're on the 4-hour time frame here. If this continues to fall, it could fill the wick all the way down to $1 here. So if it fills, it could fill the wick down to $1. If it bounces off $1, we can see it move back up potentially. But right now where it's holding under the EMA's 21-day here. EMA here is holding nicely below the 21-day EMA. We could see this potentially fill the wick down here to $1 and then bounce back up. Again, like I said, if you're going to play a stock like this, I don't recommend playing options on it. You can see the IV here on SUNW for this week. Expiration is insane. This is very high IV on any options contract. There is a lot of open interest on it, so people are on the call side, even on the put side, there is a lot of open interest. So people are buying up the stock here on the option side. You can see even into March. So there's some high open interest into March. So like I said, if you are going to play options on a stock like this, you want to buy further out expiration because of the IV. But like I said, it does have a wick fill to the downside. So if you're looking to buy calls, I would wait until it's able to break probably $2 or $2.50 for an upside play, and for the downside play, if it's able to bounce off of that dollar range.
All right, I got a next one here for you. This one's funny with at least the name, Karma Llama, bringing in NIO.
NIO. All right, I haven't talked about NIO in a while, so let's see what's going on. It looks like NIO is kind of in a consolidation period. Haven't really heard much news about this. Usually it moves whenever it has a catalyst behind it. EV sector has kind of been in a lull right now, so I like NIO. It is consolidating right now, so it needs to break out of the consolidation period for us to see a potential move. So you can see right now it's kind of consolidating in between probably 55. It would round this to 55, and then on the upside, I'd probably say $60 range. There is a little resistance at 60, and then above 60 we can see 63. It looks there's a little bit of congestion from 60 to 65 in the all-time high. So if NIO breaks below 55, it does have a slight gap fill to the downside. So if it breaks 55 on the downside, we can see it come down to 54 and some potential to 53. On the upside, I would like to see NIL hold above 58. Let me look at the 4-hour time frame here to see. Yeah, if it can bounce off of 55, because it has been bouncing off of that range, we can see it move back up to 60 and that $62, $64 range. So watch the bounce here. This could be a potential nice bounce play between the range if it's able to hold that $55.
All right, so this is one that had a recent bounce. Mentioned PLTR, definitely one of the highest trending stocks with retail traders. So definitely PLTR, PLTR.
Yeah. So PLTR, I know they reported earnings, I believe, on Tuesday. No, I don't think they beat on their earnings, however, but I know there was a lot of news with Cathie Wood and adding more to her position, to ARK Investments' position on PLTR. So it looks like right now, I just want to see what this did today before. So yeah, it looks like right today it didn't do anything really. Had a kind of a sell-off over the past couple of days. We can see that it's been on a steady downtrend here. So I think once they reported their earnings, it kind of just was on a steady downtrend. Now looking at the higher time frame here, we can see that it broke out of that $30 range. It does have room down to 25 if it breaks this $27 low. So let me see what the low is on this 5-hour. Yeah, so the 27 is a low here. So for PLTR, if it's able to break below 27, we can see some more downside movement. It does have room to about 25. So if it breaks below 27, we can see 25 on PLTR. If it's not able to break 27, comes back out, we can see a bounce to potentially $30. And then if it's able to hold above that $30 range, it has some room to 35 as well. But watch that 27 low. If it's able to break the 27 low today, could be a potential good swing for puts.
All right, let's get into another one here. I'm seeing SUNW mentioned that there was a pullback in the last 2 days. So can you take a look at SUNW?
W. All right, so let's take a look here. All right, I'm gonna look at the higher time frame first. All right, so let's take a look. It does look like it's pulling back from all-time highs right now. It's kind of holding this $16, I would say 16. So this 16 range, so it's kind of been bouncing off of the $16 level. So what can happen here? So it previously bounced off this $16 level. This candle also bounced. If it's able to hold 16, We can see some upwards momentum potentially to $19. It does have a lot of congestion until it reaches obviously 19 and then 22. It looks like 20 and 22. So be careful with this on the upside. It does look like it's holding 16 though. So if it's able to continue to hold 16, we can see some more upside to $19 and then that $22. There is congestion there. So just be careful if you do want to play the bounce. I would give your options contract a few weeks to make the move. On the opposite hand, if it breaks below 16, we can see 14.50 potentially and $14. So on the downside, it's holding 16, looks like it's holding it pretty well too. So if it's able to bounce, you could play a potential bounce play to $19. And then there's going to be some resistance at 19 before it's able to break that as well.
All right, so now I'm seeing mention in here of Mara. Mara is a little bit of a Bitcoin stock, but I'll also bring in another question here that was mentioned. Do you like any options trades that have those high IVs, like you'd probably find in a Mara or a stock like you've been seeing these lately, these retail stocks?
Personally, I don't like to trade stocks like that because you don't know when there's going to be a top. And if you don't know when there's a top, the stock could pull back very, very sharply, which you have seen a lot in stocks like that. For example, we went through SNDL. It was a very, very significant move up because there was momentum and a catalyst behind it, but you don't know when that momentum is going to shift. And the minute that momentum shifts and the stock drops, you're going to catch a very, very volatile move, and you could potentially take a very hefty loss on it. And I've seen a lot of traders take losses on those. So like I said, if you are going to trade stocks like this and you want to, catch Mara and Riot, and I think SOS, whatever these stocks are, I would recommend buying shares. It's less volatile. You don't have that IV and you don't have that premium crush. So I definitely recommend if you are going to invest in these are going to be longer term plays. They follow Bitcoin. So Bitcoin is, 5, 10, 15-year play. Again, these stocks are going to be the same way. So it's not something that I would necessarily buy options contracts on unless you're buying leaps or you're buying years out. Otherwise, I would probably trade shares. I don't personally like to trade stocks options like this because it's just too volatile. And with Mara, so it has been on an upwards momentum. You can see here with the Bitcoin movement, a lot of institutional buying with crypto. We can see some more upside. I think the 50 is the higher. Yeah. So with Mara, what I'm looking for on Mara is for it to hold above 50. So if it's able to close above 50, we can see definitely more upside. This is dependent on, again, how Bitcoin is moving, has been kind of holding its levels as well on the upside. However, Mara, I'm looking for it to hold above 50. If it's able to hold above 50, you could buy long-term. When I say long-term, I mean leaps contracts on it, or you buy shares on it and hold it long-term.
All right, and the last one we'll mention is GSAT, a 5G play.
Is this it?
Yeah, so it's pretty much 5G and also kind of space play. But the
Okay.
chart's interesting, right? Look a little interesting there.
Yeah, it looks like right now it's squeezing. So kind of pulled back here to that $2 range and I bounced off of it. Daily chart looks okay. Like the 4-hour chart. 4-hour chart, you can see it's kind of flagging right now. Made a huge move up, consolidating, which is good. You want to see when a stock makes a huge move like this, it starts to consolidate, which is very healthy. So what we can see here on this stock, it has been holding right now that $2, 220 range. Looks like it's starting to bounce up. I would watch this above 250. 250, 260, if it's able to break above that, we does have a slight wick fill up to 278 and then another wick fill to $3. So I'd watch the 250 range on this if it's able to hold above that. It has been holding this $2 range down here in the 21-day EMA, but it is currently flagging, so it could potentially break out of the flag on the upside. So watch the 250 range and then up to $3 potentially.
All right, so time to wrap up here, and we'll leave it with one last question here that was asked. It was asked is if this is going to be recorded and posted later. Yeah, you guys will be able to get this show snipped out, and also we'll be able to pull a clip from all that education that you got in the middle. That's all the value that you get from this show, and that's all Masi, guys. So go ahead and end it off, Masi.
Thank you guys for joining. I'll be back on here on Friday at 2 p.m. Eastern. So make sure you guys tune in. And yeah, I'll see you guys Friday. Bye.